Jai Hind to all and welcome this video lecture of tax planning and management. And the topic of discussion is deduction under chapter 6. There are so many deductions which are available for any person. Person means individual, company, partnership firm, AOP, BOI, as per the definition of person given by Income Tax Act. These deductions are different from for person, for individual, for companies, for partnership firm. They are different. The deduction can be claimed by a person or individual from gross total income as part of tax planning. If you plan well, you can reduce your total tax liability by using these deductions. The aggregate of income computed under each head after giving effect to the provisions of clubbing of income and set off of losses is known as gross total income. All the income under all the 5 heads will be included in the gross total income, and the deductions will be allowed from the gross total income itself. In computing the total income of SSE, certain deductions are permissible under section 80C to 80U. There is a long list of deductions started from section 80C to 80U, and that is deductible from gross total income. These deductions are, however, not allowed from the following income, although these incomes are part of gross total income. These are the exceptional cases, like you cannot claim the deduction from 80C to 80U from long-term capital gain, short-term capital gain on transfer of equity shares, and units of equity-oriented funds through a recognized stock exchange. That is, short-term capital gain covered under section 111A. Winning from the lottery, races, or the games, puzzle games, etc. Income referred to in section 115A, 115AB, AC, ACA, AD, and D. That means if you are earning any income under all these categories, then you cannot claim any deduction under chapter 6 from these incomes. The deductions are two types. First is the deduction based on investment, and second is deduction based on income. Deduction on account of certain payment or investment covered under section 80C to 80GGC, and deduction on account of certain income which are already included in the gross total income covered under section 80IA to 80U. The income arrived at after claiming the above deduction from gross total income is known as total income. This may also called as taxable income. That means you are required to calculate tax on this taxable income, which we can get by reducing the deduction amount from the gross total income. The total income thus calculated should be rounded off to the nearest rupees 10. There are some basic rules of deductions. In every SSC, that every person has to follow these rules before claiming the deduction under section 80C to 80U. These rules are covering under section 80A, 80AB, and 80AC. These common rules are: the deduction cannot be exceeding gross total income. That means the maximum deduction which is allowable for any person is gross total income. It cannot exceed. Deduction not allowed to the member if it is allowed to AOP or BOI. In case of association of person, body of individual, if AOP and BOI is taking the benefit of the deduction, then its members are not allowed to do so. Double deduction are not allowed, and deduction cannot exceed the profit of particular undertaking or unit or enterprise. That is the same thing which the similar type of instruction which is given under section 88(2). That means for a particular type of income, if individual income is deductible under this chapter 6A, then it cannot be more than the income earned. It will be within the income earned. Deduction allowed only when it is claimed by SSC. That means it is not an automatic deduction. It is not given by income tax officer. You have to claim these deduction in your ITR. Profit or gains to be recomputed if inter-unit or inter-business transfer is not at the market value. It is the duty of SSC to place relevant material. That means if you are claiming the deduction under these sections, then the onus of proving this, that these deductions are right, genuine, bona fide, these onus will be on the SSC. Onus must have, the SSC must have the papers related to the claim. Deduction to be allowed in respect of net income included in gross total income. Deduction of certain benefit not to be allowed in case where return is not filled within the specified time limit. That means if there are certain deductions which are allowed only when you are filing your ITR within time limit. Late filing, belated return, in case of belated returns, the SSC is not allowed to claim these deductions. But these are very certain specific deductions. Now here I have a summary that under which section these deductions are allowed in case of payment and investment, and which sections are related to the income the deduction which is based on the income. Section 80C, 80D, 80E, that is example only, 80EE, G, GG, these sections are related to the investment. If you are investing or making payment to somewhere, then only after completing the, fulfilling the conditions, then only these deductions are allowed. And here in part B, these are the list of the sections of the deductions which are allowed based on their income. For example, 80IA, IB, ID, JJA, TTB, and so on. Now I will discuss few examples of these sections which are related to individual and HUF only. I am not covering corporate because it is not in your syllabus. Under section 80C, this is the you can say most basic and most popular deduction among the individual and HUF. This is a part of tax planning. If you are planned well, then you can claim deduction up to 1.5 lakh and you can reduce your tax liability to a certain percentage. It is allowed to an individual or HUF only. That means no company, no partnership firm will be allowed to claim deduction under section 80C. The deduction is allowed for the amount paid or deposited. That is an investment based provision by the SEC, and investment should be done during previous year only, during financial year which is a previous year only. Okay, that means if you are invested the required amount in the specified investment avenues, then you can claim the deduction, and investment should be done between 1st April to 31st March. Total deductions shall not exceed 1.5 lakh. That means the deduction allowed is amount invested or 1.5 lakh, whichever is lower. So if you are investing 2 lakh rupee in particular investment avenue which is eligible for section 80C, then the maximum deduction will be 1.5 lakhs. If you are investing 1.2 lakhs, then the deduction will be 1.2 lakhs. That is the maximum of 1.5. Here we have the list of eligible investment. These list is basically illustrative one. For example, there are so many other investment avenues available which are eligible under section 80C. You have to refer the act for this purpose. Life insurance premium, yes, if you are paying life insurance premium during financial year, you can claim deduction for this purpose. One very important thing I should mention here, that if you want to invest, you can invest in any one of these or combination of these. That means if you are paying the tuition fee plus PPF plus NSC, that means combination of all the investment will be included. Either you can invest in any one option or combination of these options. That both options are available to you. Life insurance, after life insurance premium, it is contribution to any provident fund. It can be recognized, it can be superannuation or statutory provident fund. For unrecognized provident fund, section 80C is not applicable. Contribution to PPF, PPF stands for that public provident fund. Public provident fund account, public provident fund account can be opened in any post office or bank, specified bank, and it can be your name or spouse or children. So any contribution, any deposit made by the SEC in the PPF account will be eligible for 80C. Similarly, for 80C, you can invest in the NSC, National Saving Scheme, 8th issue. contribution to ULIP plan, subscription to any mutual fund which are specified under section 1023D, tuition fee up to maximum of two child tuition fee payment, but not any development fee, building fund. It's not building fund and development fee is not eligible. Tuition fee is eligible and covering under section 80C. Repayment of housing loan. Repayment of housing loan, that means the principal amount of the housing loan will be allowed to add under section 80C. For interest paid, that means the EMI which you are paying for home loan will be of two parts. First is principal and second is interest. For principal payment, you can claim 80C, and for interest amount, you can claim under section 24. That is the deduction available in the head income from house property. Then investment in debenture or equity shares. In this list, the last I have is amount deposited in term deposit. That is an FD for a period of 5 years or more in a bank, post office, as per the scheme framed by the government in this regard. There are few more avenues which are available for eligibility under section 80C. Next, I have deduction in respect of medical insurance premium. It means if you are paying medical insurance, you have health insurance, Mediclaim, then you can claim deduction under section 80D. Deduction is allowed to any medical insurance, and this deduction is specifically allowed to individual only, individual and HUF only. Medical insurance premium under an approved scheme of General Insurance Corporation of India, popularly known as Mediclaim, or any other insurance company. The basic condition is that the payment must be made by check or DD or any e-transfer using your banking system, that is NEFT or payment through Bhim app or any other app, but involvement of banking system must be there out of the SSC taxable income. Another thing is that the payment should be made by the SSC out of his taxable income only. For preventive health checkup, up to maximum 5,000 will be included in this section. That means this is the new thing. And for preventive health checkup means you are not ill, you are not hospitalized, but you are for maintaining your health. You are taking preventive health checkups, going to the doctor. Then these type of expenses will be covered under section 80D, and the maximum amount will be 5,000. Insurance on the health of SSC, wife, spouse, or dependent parents or dependent children. That means you can take the policy on your name, wife, covering wife or spouse, husband or wife, or dependent parent or dependent children. The maximum amount of deduction is 25,000, inclusive of this 5,000 for the preventive health checkup. In case of person insured is a senior citizen, in that case, additional 25,000 will be allowed. That means in that case, in case of senior citizen, the maximum amount is 50,000. Parents may be dependent or not, doesn't matter. Parents will be included in your insurance policy, and the premium paid on insurance policy will be allowed as deduction under section 80D. Next is deduction in respect of medical treatment, etc., and deposit made for maintenance of handicap in dependent. It is covering under section 80D. This deduction is related to maintenance of handicap dependent. Handicap dependent may be child, may be brother, sister, parent, whatever it is. Any expenditure incurred by the SSC during the previous year for the medical treatment, including nursing, training, etc., for one or more dependent person with disability. Amount deposit under any approved scheme of LIC or any other insurance company for the benefit of dependent person with disability. Maximum amount of deduction is 75,000. That means the claim will be amount deposited or 75,000, whichever is higher. In case of person having severe disability, that means 80% or more, the amount of deduction will be 1,25,000. But you have to submit the certificate from the medical officer from the specified hospitals. The certificate is for showing the disability, the percentage of disability, whether severe or not. Next is deduction in respect of repayment of loan taken for higher education. If an individual SEC, obviously this section is applicable on individual only. If an individual SEC who has taken a loan from any financial institution or any approved charitable institution for purpose of pursuing higher education is allowed as deduction. The loan can be taken for his own higher education or education of spouse or child. The amount of deduction under section 80E will be the amount paid by the SEC in respect of previous year out of his taxable income by way of interest on such loan without any limit. That means the amount which is the actual one. There is no upper limit for the interest payment of interest on the home loan. The deduction will be allowed for a maximum period of 8 years, beginning from the year in which the payment of interest on the loan begin or till the interest is paid in full, whichever is earlier. Section 80G will be covering the donations made by any person. If you are giving donation to some charitable institution, to different funds like National Defense Fund, Prime Minister Relief Fund, then in that situation you can claim the deduction under Section 80G. 100% donation is allowed in respect of donation made to National Defense Fund or Prime Minister Relief Fund, and the list is very long. I have taken only two for example, but if you see the list, that list of donations, the eligible funds will be very long, and you can refer your textbook. 50% of deduction is allowed for donation made to Jawaharlal Nehru Memorial Fund, Prime Minister Drought Relief Fund, or any temple, mosque, church, or charitable institution approved for the purpose of income tax department. If that charitable institution, temple, etc. is not approved, then you cannot claim deduction under Section 80G. There is a condition that if the aggregate of donation given to the institution established for charitable purpose or and also some others which do not serve the national purpose directly and are referred to in the rule exceed 10% of the adjusted gross total income, then such access will not be allowed. It means to say that the maximum deduction you can claim or maximum donation which you are giving and claim as deduction. Donation, whatever you want, you can give as a donation. But in case of deduction, if you want to claim under Section 80G, then the maximum limit is 10% of adjusted GTI, gross total income. Next, I have the deduction in respect of rent paid, that is covering under Section 80GG. This deduction is allowed to any assessee, including an employee, who is not in receipt of house rent allowance, HRA. That means a person is suppose he is doing business or he have his office or business or profession, then and he is not receiving any HRA, right? Then he can claim the deduction if he is living in the rented premises and paying rent. The deduction is allowed in respect of rent paid by the SEC for his residential accommodation, whether furnished or unfurnished. There are some conditions like the SEC, his spouse or minor child or HUF of which he is a member does not own a residential house at the place of his employment, business or profession. That means if he is living in his spouse house or the house in the name of minor child or the house is owned by the HUF in which he is a member, in that situation he cannot claim the deduction under this section. The SEC does not own any residential house at any other place, the value of which is determined as self-occupied property, as nil. That means if you have a house and that property is claimed as self-occupied, in that situation also you cannot claim Section 80GG. If that property is a let-out property, then you can claim 80GG. The SEC files a declaration in form of form number 10BA. And it comes under Rule 11B. This is the limit, this is the amount of deduction which is allowable under Section 80GG. What is this? Least of the following is allowable. Number 1, rent paid minus 10% of SEC's total income or 5,000 per month or 25% of total income. least of these three will be allowed as deduction. And this deduction is total income, means the total income of SSC after allowing all the deduction except the one provided under section 80 GG itself. And this is an annual deduction, and that will be claimed from the gross total income annually. Now I have deduction in respect of disabled person. It will be covering under section 80U. The deduction is allowed to resident individually. Mark this, underline this word, resident individual. That means if the individual is non-resident, then that non-resident individual cannot claim the deduction under section 80U. The deduction is allowed for a person who is suffering from any disability. Disability can be severe or lower, can be normal one. In case of severity, the deduction will be higher. Deduction amount is 75,000 rupee. But in case of a person, in case of an individual with severe disability, severity means 80% or more, a deduction of rupees 1,25,000 will be allowed. What is the condition? The SSC shall furnish a certificate from the approved medical authority in the prescribed format along with the return. That medical certificate is a proof that yes, disability is there. What is the level of disability? It is severe or normal. And then only if after filing the certificate, then only this claim will be eligible. Claim will be allowed. All these sections are related to individual. There are so many deductions which are applicable to corporate SSC, like section 80IA, 80IB and all. For business individual, that income, that deductions are basically out of income. The deduction which I have discussed in the above all these sections will be related to investment and income both. Like section 80U is related to income, right? Section 80C is related to your investment. Section 80D is related to your payment. Okay, so you have to decide before filing your ITR. You have to plan that which section is applicable on you as an SSC and how can you plan. That is a part of tax planning. You can reduce lots of tax. You can reduce your tax bill by planning well in time. Thank you so much.